question.
Can you hear me?
You can turn on your mic and ask. I can hear you still.
Okay. So now, so sometimes when I do my top-down analysis and I move to the higher time frame, as you mentioned previously, you said we should be looking for external range liquidity and internal range liquidity, and price should be moving from the internal range liquidity to the external range liquidity. But then now the issue is that sometimes price doesn't respect like the fair value gap and it moves in the opposite direction. Now my question is like is there a confluence sorry that you can provide like to further confirm the fair value gap?
Okay, so what I'm trying to say is like, are they there's a particular fair value gaps that you can know like this fair value gap is going to hold and this price is not going to hold.
Yes.
If there was something like that, then no one is going to be using trading. It can make trading very much easy if there was something like that. So but we just know price moves from internal liquidity to external liquidity. You understand? So that was just like one of the ways like you can use to find your market bias or direction to take any entry. That is one of the ways on the higher time frame. So first of all, it should be in accordance to the trend. You get now. It should be like
Yes.
if you let's say on a daily time frame, like you should be able to check the trend of the market if it's on a downtrend or is in an uptrend. So if you're able to do that, then you now look for your internal range liquidity in that direction. It's going to save you money.
Mhm.
Yeah. So
Yes.
another way then, because I told you guys whenever I have anything new, I always want to share with you guys. So there are so many ways
Yes.
you can use to have your daily bias, which we have like the streaks of the previous swing positions or key levels. We have key levels. So what are key levels? Key levels are simply these are key levels. When we talk of key levels, we mean stuff like this. We have there are types of key levels. Let's go through. We have the A-shaped key level and we have a V-shaped key level. It's a V-shaped key level. So here's a V-shaped key level. Then we have what are key level? We have a key levels like this. Please turn off your mic. Turn off your mic. So we have here's a key level. Let's say um break and it comes back and goes up. This is a key level. This one, so this is an A-shaped key level. Here's a V-shaped key level. Here's an A-shaped key level. Once this A-shaped key level fails, it's going to turn into something like this. You understand? It's going to like break off of support and all of these resistance and support. And this is a break of resistance, then price turns to support zone. Then this is another type of key level. So these key levels is going to help you like on the higher time frames. Then let's say this one here, price also come back and respect this key level with the field. So it's going to turn into and become something like a breaker block. So those are key levels. Then we also have open close key levels. So I'll show you that on the chart. So there are 6 types of key levels. We have the A shape, V shape, and we have the breaker block type of key level. And we also have the breaker block types of key levels, and we also have the open close key levels. These are open close key levels like this here. When the candle closes and another candle open, that's an open close key level. So now how do we spot these A shape and V shape key levels? Let's say for example here, you just need to turn on your line chart to make it more easier. So you just want to see here is an example of a V shape key level. So we mark it out. There's an image on this magnet to run. So here's an example of a V shape key level. You can mark it out like this. So what I'm expecting price to come and tap into this V shape key level and reject. So key levels are points like turning points in the market where price is always going to react to. Okay, so here this is a V shape key level, sorry. So we expect price to come, tap into this key level and buy off. So once it buy off, what is going to happen again? Your price is going to come into this key level. So now, first thing you want to be able to spot your key level. Let's do it practically. Turn this off. Let's do it practically. So let's say let's take this man off. Let's say, for example, we have an A-shaped key level. Here's an A-shaped key level. What do you want to do next? You want to mark this key level. You want to mark this high. This is your key level zone. So what are we expecting price to do? We're expecting price to come, tap into this key level and reverse down to the downside. So what are we expecting to see? We're expecting to see something, a candle still on the same time frame, right? We're expecting to see a candle should come, tap into this key level like this with a week. Oh, sorry. No, what's wrong? Okay, yeah. You tap into this key level with a week like this. Or like you tap into the key level with a week like this and close below the key level. You should close below the key level. So let's say if on the daily time frame or on the weekly time frame, price closes below this key level like this here. We know that price is about to start to our bias is about to turn bearish, but we don't just confirm that. You want to go now on the next lower time frame. This if you're on the daily time frame or weekly time frame, you always what you want to see. Price should tap into a key level and close below that key level. Like the candles close below that key level. And what do you want to see now? If you're on the daily, go in 4 hours. If you're on the weekly, go on the daily time frame. So just go one time frame lower. Don't use the 8 hours. No, if you're on the daily, go in 4 hours. That's one step lower. So what I'm going to see in this zone here, you're going to see price is going to come. Let's say price is going to feel something like this, a sweep and a break of structure to the downside. This one you see on the next lower time frame. When you see a sweep here, here's a sweep, and you see this sweep here. And you want to see a break of structure to the downside like this. So once you've seen a break of structure to the downside, your trend is already confirmed that price is already bearish. You start looking for sell positions. So let's take an example. So here's a V-shaped key level on the daily time frame here, 24 hours. Here's a V-shaped key level. What happened? Price came. So for you to know price came and tapping, once you just need the line chart to mark out your key level. So once you have the mark, you want to switch back to your candlestick. You see what happened here? Price came, tap into this key level. Yeah, tap into the key level and close above the key level. You get it close above the key level. So what happened? You want to just switch to the one time frame lower. And you see, either you want to see something like a sweep. So here we had something like a sweep here. You can call this a sweep. And a break of structure. You want to see sweep and a break of structure to the upside. So here's a break of structure to the upside. Another break of structure again here to the upside. So you want to see a break of structure upside. Yeah, price came up to this point. That's really giving you a bullish. Well, it's really telling us we are bullish. So what they're expecting for price to retrace and come down here, look for entry. So how did I find this entry? I think I went again, I turned on my line chart and I saw another key level here. This was another V-shaped key level here which I marked out. After marking out this V-shaped key level, what happened? I turned back to my candlestick and I went down to lower time frame to like refine this place because on my candlestick chart, so this guy could be used as liquidity and this V-shaped key level could be very valuable because it's a break of structure and this candle could be used as liquidity. So I had to now go to let's say 15-minute time frame to refine my entry. So here I saw that there was a very nice entry here. What is sweep, break of structure to the upside, liquidity, and what happened? Price just come down, sweep, liquidity tap here, and I had my trade. Successful trade. So that's very easy. So yeah, even on this one here on GBP USD, let's check the weekly or daily. Let's check daily. Daily. Okay, daily. Price tap into this. Yes, on the line chart. So here we have this was like a breakup block key level because price this was a V-shaped key level which failed. This was a V-shaped key level which price can break down. So what happened? We expect price to come back up into this point and tap into this key level here and sell off. So that's what I was looking for. So on this daily time frame, here is on the candlestick chart. Yes, on the candlestick chart, we had price retrace to this zone. This on the daily time frame thing also, I have to switch now to 4 hours. So what am I using to 24 hours? I want price, let me turn on my line chart. I want price to break this low. Again, now, I just want price to break this low to the downside. If price successfully breaks this low to the downside, what am I looking for? I'm looking for sell opportunities only. Once price breaks this low, is what I want. I just want price to come down, something like this. I want price to leave here. And this guy off. I want price to leave here, break this guy, and what happens? I start looking for sell opportunities, reverse to the downside. So that is how I look for my entry. If I turn it on here, you see prices say bullish. I just want a break of structure. Yeah, so it's like it's something like a sweep here, and I want a break of structure. So if it doesn't, I'm not going to take a trade on a hard time. I'm not going to take any trade. So I'll just wait. I'll be patient. Start looking for setups on 15 minutes. Yeah. So let's go again back to the daily. Let's check Euro USD. I also have a trade there. Euro USD. I have a trade here, which is actually going. So this trade, I think, let me see weekly time frame. Okay, daily time frame. So I think there was a key level here. Let's turn on our line chart. Here was a key level, an A-shaped key level. So if you draw a line here to his right side, let's turn back our line candlestick chart. Let me take this off all. No, I have a trade. I'm waiting for it to trade up. If I can just take it off, everything, let's start from approach. Let's explain how I got my entry there. So what do I want to look for? I just need to come to the chart on the daily time frame or weekly time frame. I want to look at where is price at the moment. Here's where price is. I want to look for any key level, any significant high. So for me to do that, I need to turn my line chart. So this is significant high, very significant high here. So what happens to this high? Here was key level. Times magneto. Here is a key level, an A-shaped key level. So I just draw a line on the A-shaped key level. So next, I turn on my candlestick chart. And what happened? Price came tapped into the key level. Yes, the price came tapped into this key level here and close below the key level. So next, I just switch down to 4 hour time frame. And I want to see a break of structure to the downside. So I can turn on my line chart so I can see. So yes, here was a mini break of structure, but here is a mini break of structure. I'm waiting for. I want price to break this structure here, then I'm going to show what I'm doing. So yeah, but normally I call it trade because I had something here like a sweep, protected high, liquidity. I use this guy as liquidity, and price I took this 7 here, and it's retracing slowly and going down. So let's see. I took another trade here. Let's see, I took 25-minute time frame here. So everything, once price already changed the trend, I'm broken. I want this low here to be broken to the downside. Then I'm sure, pretty sure, our direction is bearish. Let's go back to this daily time frame. Turn back our line chart. Let me show you an example. This is another example here of something like a breaker. Here is a breaker key level. Support that tends to resistance. Here's an example here of this other type of key level I showed you. A V shape was validated, was broken, and came back to be tested. So here's an example of this. So all you need to do is you draw your line to mark out this V, that's your key level here. You turn on your line chart. And what happened? Price came back, tap there, and so came tap and so. So to define it, you just need to go to the next time frame, which is what time frame. You want to see price. So let's go back to the daily. So on this daily time frame, price tap into this key level and close below it. You get. So what do you want to do? You want to just switch to the next time frame, which is 4 hour time frame. So again, sorry, I didn't say you can also see an engulfing. You see an engulfing candle. This engulfing candle also means something, means our trend is bearish. So after an engulfing candle, you can see start looking for sell opportunity. But after this here, look at, let's turn on a line chart. You see there was a significant low. We wanted to break this low to the downside. Price break the low to the downside. So we need a small retracement to take a sell. So here was a retracement here. Took a sell from here, from this open close key level. Here's an open close key level. Price came back to this open close key level and sold down there. This guy is here, we use it as liquidity to for liquidity for a sell to the downside. So all you just need to do is just go to the lower time frame to find your entry. So we already know the here is our entry point here. Here's our entry here for a sell opportunity. So you need to come again, you go above, you look for any breaker block or other block that's going to support your entry. You use everything as liquidity. Tap to get sell trade from there, crash up to here. So that's just like the new way I found to get my entries. The new way I found to get my entries. In USJPY. USJPY. Here was SNR trend line. See this the same stuff here, same stuff. I think, let me see if I use the weekly or I use just daily. I think I use just daily. I use just daily. Let's see. I use an open close here. I use an open close. I use an open close. Oh, this one up here. Something like this. Let's take this off. This thing hasn't reached my TP yet. Let's take everything off here. Now go to Messi. Okay. So here also I got this entry. Again, it's very, very basic. So this is what we got. We had something support to resistance. We had a V-shaped key level which was validated, which didn't work out, and price came back to retest it and sold off. That's what happened here. So here was here I mark it with this and then through it. Get so I'm just waiting for price to come tap here and it's going to sell down. So there's also something about trend line. So let's say this shift here haven't happened yet. So all you just need to come and you see two highs here. You can mark it like this with your touch as a trend line. So price is always going to come back and tap there. And to confirm your trend line, you're going to see bullish and you're going to see bearish engulfing. I don't know. Yeah, there was not really a very good bearish engulfing, but the best trend line always have bearish engulfing. I'm going to emphasize on that on maybe the next Zoom call. I'll look for time and I'll create a video concerning how to confirm a trend line. But let's go back to what we're doing here. So without the trend line, even the trend line is like an added conference. It's not a confirmation, but an added conference. So yeah, let's continue. We have this our V-shaped key level, which turned into an A-shaped key level. Price came now there, tapped here, and we're expecting price for a sale. So you just need to turn on your candlestick stops. And now we have what we call refinement. So once you have already got close in this guy here, you can refine it by dropping down to the next lower time frame. You just need to refine, look for, or you can see once you drop to lower time frame, like let's say 4 hours, you turn on your line chart again and see anything again here that can still make you to like, as you can see expect price for and see you have the same thing here. We have the same setup, the same stuff here, the same thing. We had TP here again. So what you want to do is that's your 4 hour key level. So you can back it out. Your 4 hours key level, it's like a bigger block. So you can see maintain this one, so you can take it out. Even. So yes, this is what we call refinement, because price is always going to come back to this guy to refine to coming down. So you turn on your candlestick chart and this is your trade setup. What you want to do is this guy is going to use as liquidity. Mark it out. Cool. And what happens? Price comes tap there and sell off. So once you've gotten something like this already, price already come into your key level zone and closed below. See, price came into a key level, it closed below. What do you want to do? You want to go, let's say, on a 1 hour time frame. You want to see a break of structure of any significant low. Here's a significant low here. You should expect a break of structure. If you take a sell here, it's fine. But you wait for this break of structure here to start looking for confirmation from what time frame entries to pick your sell setup. So you can go again now to 5 minutes to start looking for sell because you're waiting for your trend to be bearish. You're waiting for your trend. Since from up here, even there's so many sell opportunities here. Here's a QMR trade. Someone take. Here's a QMR trade. Someone take. Here's another QMR trade. Someone take. We sell. Bigger than you. Okay, here should be a breakup of liquidity. Here's going to be liquidity. I'm not be famous like money and the winners. All right, this will be liquidity, and this money is going to be breakup block. Breakup block. Yeah, you have to sell. Sell. When you see again what happened, I won't take that. Let's check. I won't take anything here. All right, something came out, but it's not really clear. I'll take that. I'm like, okay, yeah, you can use this guy as liquidity. Use this guy here as liquidity, and another block entry here. Other block entry for sell. Let's see. Let's check. Nothing. News. Nothing. Yeah, something. Sweep. Something. Going in a low more lower time. This is sweep. Protected low liquidity price comes up here. Sell off. What again? Yeah. Let's see. I don't know, but you can look for other any sell conferences I've been showing you guys. Break up block, other blocks because you're already putting your trend. You understand? You're already putting your trend. And let me show you guys some other setups, some other ways. Other setups like how will I say other types of setups you can take as you can also find like I use that as a confirmation sometimes. It's good for confirmations. Let's check. BNX USDT perpetual contract. BNX USDT. I want perpetual contract on Bybit. All right. So let me see if I can see how that trade again. I think 15-minute time frame. Oh god, yeah, I promise. Yeah, so yeah, we had the trade here. So I think it was something like an order block entry. There's an order block entry. Where's your liquidity? Let's say these are liquidity. Price came tapped here into our order block or breaker block, and we had to sell. We had to sell. But now there's another confirmation. I'll also do a video on this after you've gotten price came. Let's say price came into your QI and start going up. Now you don't enter yet. Wait for a break of structure. To the downside. That's like an added confirmation to your entries. Then here will be your liquidity, your inducement liquidity. So this is where you should enter. After price come against your inducement, this is where you should enter. Okay, yes, we should enter for sale. You target right this low. So yeah, gives you a more refined entry. Okay, so it's like confirmation. So I'll do a video on all of this stuff. So I've just been busy lately with school and some other stuff. So I'll do a video and I'll make sure everything's clear and everybody's on the right track. We'll try my best for everybody at the end of the day. We all should be on the right track. So I don't know if you have any questions, you can ask questions. You can use the chat box or you can turn on your mic and ask. Any question? Then marking the day and V shape. Do you only mark opening and close your candle? Yes. Very important. So now let's go back here. When you're marking out your V shape and A shape, you mark the closing, like the closing, the closing of any candle, not the opening. It's mostly the closing of any candle of the candle that gives you the V shape. So let's say okay, let's go on the day time frame here. Okay, so here look at here's here's a closure and here's an opening. So for you to have this, just turn on your line chart. It's going to make it more easier. On the line chart, wherever I see any V shape, wherever I see any V shape on the line chart, whether there's an opening, there's a closing and opening of a new candle. Here's an example. Let me turn on this magnet now. Here's an example here. If I mark that out, turn on our candlestick, you're going to see that there was a closure. This candle closed here and you open. Forget about the weeks. You don't include the weeks. You understand? So whenever there's a closure, just the closure. Forget about the opening, the closure. Even here, this one here, same thing. So even CRT works. Yeah, there was something like there was a CRT here. Even this reversal here has a CRT. And this CRT is very valuable because it's at a key level. Here's a key level. This CRT also happening. So this setup was a high probability setup. And the setup is not over. It's not over. Look, let's go on the 15-minute time frame again. This setup, this buy is going to keep on buying. So what I just need to look for, I need to see come again. I wait for any retracement. The trade was very straight up. It just came up. I will look for any more retracement and all more confidence to look for buy. Only buys. So I did right up to this position. So any other question again? Hope that one down is clear, Stella.
Yes.
All right. Any other question?
Yes. Like when you spot the A and B, like does it matter the trend on which you're spotting it?
No.
Like maybe on the bearish trend you can spot an A or a V.
Okay, so one thing, that's a good question. One thing about is about the trend. The trend doesn't actually matter. What matters, what you're going to see, if the trend is bearish. If the trend is bearish, let's say spotted, let's say a V-shaped key level like this, and waiting to let's say to price to come here and tap. You avoid unnecessary losses because you just want price to tap into this key level and close above the key level. You understand? And you also have one time when you wait again for price to like break structure. You wait again for price to like break structure before you enter. So if the trend is bearish, you see price not going to respect it. Price not going to close above the key level. Just go and whenever price breaks down like this, what do you expect as a white trader? Expect now the opposite to come. Price will now come back and test this key level. You get that? So you're not going to be losing any trade. Both ways, you're going to make profit. So if price comes, if it doesn't respect your key level, just know it's going to break and come back to that point there. Let's on this line chart off. Let's see together. The time is running out. No problem. Let's go into stuff. Let's GPY. Example here. Here was a good V-shaped key level. Like, let me mark this V-shaped key level. Here was a good V-shaped key level. I couldn't wait for to enter to a buyer. If I turn on my candlestick chart, look at this what happened. Price came. It means as if it's closing. Look at it close above. Yeah, close above the key level. Let me zoom. It close above the key level. So let me mark this out. Something. Right, let's mark it here. So now I want to now go on a lower time line for us. So yeah, what happened for us? So reason why I want to see only for us, I want price to break this high. You get, I want price to break this high before going for any stuff. The price didn't break the high. Instead came here. So me as a white should have not entered any study on the price of broken structure to the upside. If I was looking for buy setups, on the price of broken structure to the upside, if I was looking for buy setups. So price didn't break structure, price started reversing. Now once we've seen the price reversing already, it's already giving us what price going to come back to this guy and sell off. So next again, we discuss about open close key levels. Open close key levels are very important. Price always reacts to those stuff. The open close key levels. Open close key levels are just this guy say this open close. And we will discuss which one can be valid. Because me I know good open close are the ones that has liquidity close to it. These are good open close key levels. These are good open close key levels. There are people who mostly trade just with open close key levels. Here's an open close key level here. Here's an open close key level. Yeah. Until price went up, came back, tested it, and what? Yeah, so that's we're going to do all these things. What we're doing is time to time, we're always going to launch all these classes. We're going to discuss anything. So any other question? Before time's run,
Yes.
we have I think 6
I
minutes.
think my last question. Like when you spot an A or a V shape, then when the candle closes above the point where you mark your line. So now what is your target? Where do you anticipate price to reach before moving to the opposite direction?
Price always move from key level to key level. This year answers our question. All right. So yeah, we already know price tapping to this key level and is buying up. Okay, and it's buying up. So now what I was expecting, we know price may like here is an A-shaped key level here. We know price may buy up to this point and start reacting to sell down price. And here's a V-shaped key level which failed. So price may reach up to these zones before trying to reverse. So those kind of zones should be your target. Again, so I should be buying to this kind of zones here before I can. But these are key levels which price may likely react to them. To produce a key level price may like. So price may come and break it sometimes. If it comes and breaks, if it comes and taps here and gives me let's say close below, I know that it's going to come back in down. Yeah, so here's also like a fair value gap. So price may tap here. Now here's also like an order block. So you just need to be very vigilant. So you just need to be price move from key level to key level as moving from internal range to external range. So any other question? Hope that answers your question.
Yes.
Any other stuff you can ask any question? You still have 4 minutes. Any other question? If it's fine, then I'll be really happy. So whenever I see key levels, you can send them to the group chat. I'll do my best to respond to all the messages there. So I think no question. So you're having less trading week. Back this. Whenever you're doing nothing, go on the chats. Try. Okay, the jump trade I posted. Yeah, the jump trade. We have 3 minutes. Let me try to be very quick about it. So now this jump trade, what I did was on the daily time frame. Let's take everything out again. I will be a little bit fast because it's about to expire. So on this daily time frame, I just had to come here, turn on my line chart. And first of all, price have been ranging at this low. Okay, forget about that. No, we don't focus on that. So here was a key level, we valid key level. I marked out my key level. I marked out my key level and I turned back to my candlestick chart. And I saw the price came, change this key level to the downside and close above the key level. So what do I do next? I just need to switch back to switch down to the next lower time, which is the 4-hour time frame. And I want to see, let's say, a break of structure to the upside. So to see this break, you cannot really see here, you can turn on your line chart so you can see. So here was a good, like, I need to see a sweep and a break of structure. That's what I was explaining before. So if you weren't active, then you can, I'll put the video posted. So here was a sweep, and here was a break of structure to the upside. We almost swing structures and all this stuff. Here's a break of structure upside, and here was another second break of structure upside again here. So we can turn on our candlestick chart now. So you have all this break of structure upside. And I notice here, let's not just say that's an key level. So there's a break of structure. Ronnie's price is going to come back down to this zone to buy off because I've already confirmed my trend is bullish. I just expect price to come back here to buy. Again, you can use your Fibonacci. Let's do from this low. Let's try this low. This high. Okay, this low, this high. Where's our golden zone? Here's our golden zone. Because we have a break of structure. Here's our golden zone. Again, now you just need to go now to a lower time frame. So you must stable time frame. You want to define your trade from. I think I use 30-minute time frame. It's 30 minutes. What's wrong with my network? Yeah, I think it was 30 minutes. Yeah, 30 minutes. So now here's my golden zone. I'm expecting price to come to this golden zone and buy off. So what you have inside the golden zone, I had my liquidity form. And again here, I had my sweep to the downside. And now I use these guys here as my key levels. Because I wasn't seeing any other block, any valid order block here. So I just marked out this key level. So there's only weeks here. So on lower time, let's say 5 minutes, they're going to order blocks at this point. So I just saw this key level and I marked out the key level. Let me take out this guy. So I marked out the key level from here, add my sweep, break of structure to upside liquidity, key level, what happened, price goes up, comes tap here, here's my entry, tap here, and but now still for more buy opportunities here to price reach to this stop. So I think we're less than 1 minute. I was in the call, the video is going to be sent to the group, and have a nice day.